There's a look at U.S. futures. They remain in a positive posture, and very evenly so. Well, one item in the federal budget that has attracted a lot of attention from owners of investment real estate and owners of other investment products is changes to the capital gains tax. Beginning in June, the inclusion rate, how much of a capital gain is taxable, will change. It'll increase from 50% to two-thirds to 66% roughly for gains above $250,000 for individual investors. For more on what this means for owners of investment properties specifically, we're joined by an expert, Davelle Morrison. She's a broker for Bosley Real Estate. Thank you so much for coming in.
Thanks so much for having me.
So we've spoken to accountants about this, and they say will be scrambling for the next several weeks, understanding all the implications of this for their clients. What's it like in the real estate sector?
Well, I would imagine that there's going to be some investors who are going to say, you know what, I want to sell my property right now, and now they're going to need to make sure that it closes before June the 25th. But I think it's also going to take some investors out of the market. Some people are now going to think, you know what, I don't want to invest in Canada anymore. I'm going to invest elsewhere. So I think that that's going to be a huge loss for our country, and I don't think that that's something that the government has really thought about. Over the last few years, the largest number of rentals have been provided by private investors, not the government. And so I think we're going to see a lot of rental units being sold off, and we're just going to have fewer places for rent.
One big focus seems to be family cottages for reasons that are easy to understand. How might this affect the dynamics of family cottage ownership?
Well, I think, thank you for bringing that up. This has been billed as, oh, this is something for the wealthy. But I think that people don't understand that, if they've got parents who pass away and they need to sell the family cottage, they will be impacted by this tax. I've got clients who their parents have passed away. They need to sell the family home in Toronto. They will be impacted by this tax. So there's a lot of people that are going to be impacted by this tax and actually realize.
Do you expect a flurry of activity between now and the deadline in June?
I would imagine there would be. I do think so. I think people will they'll start to firm up on their deals and try to close earlier to make sure that they beat that June 25th deadline. And they might all of a sudden start thinking, you know what, let me sell my property now and get my money out of the country and invest elsewhere.
Okay, I'll give the next question to Cash.
Yeah, but do you think that as Canadians, the idea of investing in the U.S., for example, or investing outside of Canada, I mean, I'm not a tax expert, but I think unfortunately, the government sort of has the advantage here because the other option or the alternative of investing in real estate outside of Canada, I don't even know if you get the same type, I think it's income when you're outside. So it's almost like there isn't another alternative. If you invest outside, the tax situation won't be better.
Well, you can invest in other countries. So forget about the U.S. You can invest your money in the Caribbean. You could there's lots of Canadians buying houses right now in Europe, in Portugal, and all of these other places. And there's also a lot of tax havens around the world, things that we don't really talk about. So if you, let's say, invest in a tax haven in, let's say, the British Virgin Islands, for example, and you use that money to set up a corporation and invest in another particular country, as long as you don't bring that money back to Canada and you just leave it in the BVIs, then you don't need to declare it to the government, and you don't need to declare it as income. So I think a lot of Canadians might start to say, you know what, maybe my principal residence doesn't need to be Canada anymore. Maybe it's also going to be another country. Maybe I don't care so much about the healthcare because I can't get a doctor anyway, and they just might leave. So I think that we're really going to see a lot more people have that sort of flight, because I feel like this was sort of the camel that broke the last stroke that broke the camel's back.
What about other measures in the budget intended to drive increases in the housing supply? How would you grade it?
Well, there's one with the 30-year amortization, for example. If we talk about that, it's interesting what they've decided to do. It's only for purchasing new builds. So if we look at pre-construction houses versus pre-construction condos, a buyer will buy a pre-construction house, their deposit's not protected. If they buy a pre-construction condo, their deposit is protected. That being said, there's a number of developers right now who've gone bankrupt. So there is that gray area where people start to wonder what's going on with their money. And then now, if we look at purchasing a resale condo where the price per square foot is probably around $1,000 to $1,200 price per square foot, if they were to purchase a pre-construction condo, then you're talking about a price per square foot of about $1,500 to $1,800. So now you're essentially putting these first-time buyers with this 30-year amortization in a product that isn't as good, and really, it might buy them an additional 4 to 5% of purchasing power. Meanwhile, they're accumulating a lot more interest than the 25-year amortization. Oddly enough, this 30-year amortization plan would work really great for investors because they can write off their interest. But I realize that's not who the intended person was for this. But I'm not sure that this plan was actually really well thought out. It would have been nice if maybe they consulted with some mortgage brokers to get some better advice about this plan.
Okay, last thing is you're also critical of a use it or lose it provision that applies to developers. And I gather the essence of this is once they've received the necessary approvals to build, they've got to build soon.
Right. I think they've been given a window of 2 years to build. I think that, again, as I mentioned earlier, I wish they would have consulted with the mortgage brokers. With this, I think they needed to consult with people in the development industry because there are lots of reasons why a developer might not start building right away, right? We know that there's labor issues. We know that interest rates are so high, it's so much harder and more expensive for them to build. And so they might wait a little bit longer before they build. They're not, trust me, I'm sure if they could build quickly, they would want to. The faster they build is the faster they get their money. So I think this use it or lose it provision is misguided.
Davelle, thank you.